If you go back to kind of the full history of banking, mostly what you're trying to do is make money more efficient. So gold is costly to move around, it's costly to verify, it's slow. And so most of the history of banking was how can we move this faster by moving it as little as possible. So for example, you deposit gold in a third party, and then if me and you are both using the same party and I want to send money to you or you want to send money to me, we just contact that third party and say debit from this account, add to this account, and that just represents our claims to that gold moving, and that trusted third party just keeps holding the gold. That way, the gold has to move and get verified less often. That's kind of the multi-century history of banking for the most part. And whenever that kind of blows up, you add another layer of centralization. You kind of just built centralization on top of centralization on top of centralization. What really kind of kicked it into high gear was the introduction of the telegraph. And so that was invented in the 1830s, but it wasn't really widely deployed until the 1860s. So cross continent, cross Atlantic Ocean, connecting the Western world. By the early 19th century, it crossed the Pacific. It kind of connected the rest of the world over time. And by that point, we could move transactions at the speed of light around the world, but of course, we still couldn't move the physical settlement. Over time, this fractured into increasingly centralized systems. They dropped gold backing entirely, and there's not really been a viable alternative for that time. And so we kind of find ourselves in a world where there's 160 different fiat currencies or so. Most of them rapidly lose value. A handful of the best ones lose value slowly. Most of the other ones are not wanted anywhere outside of their jurisdiction, right? So, for example, I have Egyptian pounds and Norwegian kroner in the drawer next to me, and there's very little way to spend them here in New Jersey. There's even converting them to other assets. There's very little liquidity for that. They basically lose all of their monetary properties outside of their jurisdiction in a similar way that arcade tokens or casino chips lose value outside of their very narrow defined, kind of issuer regions. And there's only a handful of kind of global assets that connect that all together. And so one of the contentions I make in the book is that, even though the broader crypto space has been filled with hype and fraud and scams and things like that Bitcoin and some of the underlying technology and things like stable coins are actually powerful innovations that are solving problems and that are probably going to surprise a lot of people to the upside in the years ahead in terms of, what their staying power is like and what they end up changing.
No, it makes sense. And then do you see, I guess the risk of centralization and the CBDC is a classic thing that a lot of people talk about. Do you think that's something the governments are going to try to sort of bring it into the Fed and their own control?
I think that's the big fork in the road. I think that, CBDCs are basically the capstone on the multiple centuries of centralization that I just talked about, right? So that's the final thing. That's basically that the government can monitor every transaction that happens, freeze any transaction they don't like. That's kind of the end state from the centralization perspective. On the other hand, we have, for the first time in history, we have ways to do distributed settlement, ledgers that are backed up by energy in a decentralized manner rather than just tied to like one central bank's ledger. And so we kind of for the first time have the ability to do speed without centralization. Whereas for centuries, almost every friction in money is solved by centralization. You say, okay, we'll just make this friction go away by centralizing it. We'll just use the shared ledger. And then when that has frictions between like another shared ledger, we say, okay, we'll build a bigger ledger under them. We'll make it a central bank. And when central banks have trouble, kind of connecting with each other, they resort to connecting it into an even bigger central bank. So the world reserve currency, it used to be Britain, now it's the United States. Almost every problem is solved by centralization. But with this technology, as long as humanity has the internet and other high bandwidth manners of communication, which they've had for a long time now, there's ways to do this in a more distributed manner. And so I think that technology is going to be very powerful. And we've kind of seen interesting scenarios where, for example, Nigeria, they have ongoing long-term currency crisis, high inflation, persistently high inflation. They also have a fairly tech-savvy population, especially in cities there. And so you had very high adoption of things like Bitcoin and stable coins. And so the central bank said, well, okay, we're going to block all banks from sending money to crypto exchanges to try to slow this down. And we're going to introduce a CBDC. And what happened was that ban was in place for something like 3 years. Nigeria, by most metrics, for example, Chain Analysis estimated that they had the second highest crypto adoption in the world, and specifically the highest peer-to-peer trading volumes in the world, because that's how they went around those bank blockages. So they failed to slow down, Bitcoin, stablecoin, and sometimes other crypto use cases or speculation. At the same time, their CBDC had very low and slow adoption. No one really wanted it. It wasn't really solving a problem that people wanted. And in recent months, the central bank has actually reversed their prior ban. It's kind of acknowledging that it was not working, and instead they're saying, "Well, let's instead try to regulate this because it's not working." And I think that's kind of a theme we're going to see a while. Is that central bank digital currencies, they don't really solve a lot of problems that people are looking to solve, and so I think we're probably going to see an ongoing battle between what policymakers want to happen and what the people find actually kind of serves their needs better.
What is your outlook for Bitcoin and I guess cryptocurrencies in 2024? Do you have a sort of any biases?
We've already hit some of the targets. I have a very big range for what I expected to go to. I've been trying to stick to like a 2-year view, because I don't really know for sure what's going to happen in 2024. I have higher conviction that throughout the course of 2024 and 2025, it'll be notably higher than it is now. That's kind of my overall base case. I'd be surprised if we didn't see six figures in that 2-year view. Certainly possible that we won't, but I'd be surprised if we would not. And from there, there's a very big range because you're basically you'd be trying to predict what do humans do when the price goes up. Well, how much of them will buy? I don't know. But basically, we know the supply side. We can also look at on-chain indicators to see, for example, the behaviors on the supply side. So you can look at how many coins are held by entities that have a very low propensity to sell. And during bear markets, that ratio goes up. The people that have been buying coins in the bear market that have gone through a lot of that, they're generally not going to sell anytime soon, even with a significant bull run. It would take a very high price point to get those coins out of their hands. On the other hand, when you have bull markets, you have a lot of new buyers coming in. Generally, that's the handful of times when those longer term holders tend to sell. They sell into that strength. We've not really seen that cycle start yet, and so I still think we're fairly early phase in the bull market. But that doesn't mean anything about 3 months or 6 months. Generally, my research shows that Bitcoin price is heavily correlated with liquidity in any given multi-month period. Generally speaking, what happens when the reverse repo facility gets low? What are some of the liquidity actions that they can resort to? How bad would they let liquidity get before they were forced to intervene? Those types of things can all determine what Bitcoin does in any sort of given quarter or couple quarters. But long term, next 2 years and longer, I'm quite bullish.